1. All right, good afternoon. Matt Davio back with Jonathan Eliasof. Jonathan is the founder of PatternTraders, LLC, which I'm going to read this right from your site, Jonathan. It's a boutique trading and research firm that provides currency and commodity advisory services to private investors. So we'll keep it real simple. It's pretty straightforward what you do. They can find information on your firm at www.PatternTraders.com. It's a plural. So I want to make sure that we make folks know. Thanks for coming on, Jonathan. I appreciate it.
Thanks for having me, Matt.
So, we were talking a little bit before coming on air. I always like to, just make you a little bit comfortable. Why don't you tell us a little bit about your upbringing, maybe some things that you didn't realize when you were young that got you into the trading business, and kind of your road to where you are today, where you went to school, why you went to school there. Just give us a little background.
Sure, Matt. I grew up here in New York. I spent time over at Babson College. I graduated with a dual concentration in finance and entrepreneurship. After Babson, I took a job over at Brown Brothers Harriman in their investor services group, and I had a lot of day-to-day interactions with their currency dealing desk over in New York, and that's pretty much where I first became interested in currencies. I began PatternTraders, LLC back in 2006. We are a CTA, an NFA-registered CTA. We right now trade strictly spot Forex, and we potentially will be exploring commodities in the near future.
Right. Now, Jonathan, you said that you picked Babson. I want to go back a little bit because of the entrepreneurial spirit and the notion of that school being a top performer, top program in entrepreneurial studies. So, what was it? I would say a lot of people go to school wanting to get into business, but they don't really say, "Hey, I want to be an entrepreneur and run a business." So, did you run businesses before you went to school?
To be honest with you, Matt, I really did not. My family actually comes from an entrepreneurial background. My great-grandparents owned a garment factory in New York. My father had a bagel business that he opened up early in his career.
Okay.
And, pretty much just stuck after that. I was pretty inspired by the entrepreneurial mindset. And I fell in love with Babson. It's a beautiful campus, a lot of diversity there, and just the culture. And I really just, fell in love with the school.
And so, with that in mind, what did you end up studying again? Was it finance, you said?
Correct. It was a dual major in finance and entrepreneurship, so we took a lot of entrepreneurial courses. And, I took some classes where I was introduced to trading, on a basic level, but it wasn't until I went to BBH that I really started learning that in greater detail.
Well, so, even in a lot of the bigger business schools, I went to Michigan, they don't really have a lot of classes, or at least they didn't when I was in school in the early 80s, early to mid 80s. On trading. So what were you exposed to in some of your early classes? You said you graduated in 05, so you came after the first bubble, so I'm curious, what schools are teaching about trading now?
It was pretty basic. The professor that I had at the time, it was a financial modeling course where we learned the basics of trading. It did some technicals, and after school, after classes, the professor would have some students afterwards, and we really just started learning a little bit more about trading. He had his laptop he brought with us. It's a very hands-on college, so a lot of the professors were very, very interactive with the students after class. It was a financial modeling course, though. We learned some basics on trading, some technicals, things like that.
But mostly fundamental based. Again, I would say most
correct
portfolio modeling and that type of thing.
Pretty much, Matt. It wasn't the hands-on technical analysis that I really started learning after school. But we did have some exposure in some of the activities, extracurricular activities at Babson. Some of the professors really taught us some good things there. But it wasn't until after school that I learned how to trade technicals.
So you go to work for BBH, and what kind of work were you doing there? Again, you were obviously dealing with customers, but
sure.
Why don't you give us a little background?
Yeah, absolutely, Matt. I worked in their investor services group in Boston, and what we did pretty much was we interacted a lot with a lot of the asset managers, and we made sure the trades went through. It was a lot of operations. It was very basic when I went there. After the first year and a half, I did a little bit more hands-on with the dealing desk, talking to them about the trades, failed trades, how do they go through, what's the back end look like with trades, and then that's really where I wanted to learn what was going on the other side of this here? What are the asset managers doing?
Yeah.
How does the whole operation work? And that's where I started to open up some demos and really just start studying a little bit on the subject.
So operationally, very interesting because a lot of people never even touch that side of the business
sure.
and deal working for a number of hedge funds myself and running my own, you always had to deal with clearing issues and brokerages, and that's a big piece of the business that when you're running money is difficult for people to understand. It's not just buy and sell. You have to recap your trades every day and write down as you're doing them and make sure things got executed and at the prices that you thought they did. So
exactly, and that's what a lot of
things that go on there. Yeah, there's a lot of things that go on there. And I would imagine that was very beneficial. When you were at BVH, I'm just curious, were the trades in all asset classes? I mean, what interested you into the Forex and now, as you said, maybe expanding into commodities? I would say most traders start, unless you're working for a bond desk or working for a trading desk somewhere, most people don't start there. So, I'm curious, what were you exposed to?
I mean, I was exposed to every type of asset class, Matt. What attracted me to currency specifically probably was the global side of things. BBH was very global at the time, and a lot of our clients were overseas. So you saw a lot of the economic impacts of things, how they went down, and a lot of the funding, repatriation, and it just kind of seemed pretty sexy to me just to see what how the trades were funded and really why people made trades the way they were. You know what I mean? It's pretty interesting to me. I don't know. I just think I had more exposure to that.
They're a British firm, aren't they? I'm trying not to be too ignorant here.
Yeah, they're overseas. They had a overseas British firm. They're in New York City, Boston, but they also have Asia offices as well. Sure. So it was just a very global firm. Yeah. And I think currencies really has a big global perspective. Tends to more so than a lot of the other asset classes.
Yeah, again, the biggest, the most liquid, the baddest markets are definitely Forex. Sure. That's where money is traded, and money drives all other asset classes, as we're seeing very directly, and even the smaller mom and pop investors are feeling that every day. And so let's get into the meat of what you do a little bit here.
Sure.
How did you leave BVH and then start PatternTraders? What drove you there?
Pretty much what drove me there was, just seeing the interactions of the dealing desk. I spoke literally every 2 hours with our FX dealing desk. I was close to MIT at the time. I went to some investor meetings over there. A lot of traders came, presented some ideas on technicals, some fundamentals as well. But I was really exposed. Being downtown Boston is a very small community, and I was exposed to a lot of hands-on traders. And at the time, I said, let's take a chance here. I needed some practice first. I spent a year or two back testing, did some demo accounts, did some small live accounts, and things started making sense. I utilized a breakout strategy, momentum based, and I found that was I had some success with that, and I stuck with it ever since. So I trade strictly patterns, momentum, and breakouts. Those are the three avenues.
Give me a couple of your go-to patterns that you like to look at, and spin them the way you like to look at them. I always love to hear about it because everybody trades breakouts and patterns differently. So give me one or two examples of what you like to do.
My favorite pattern, Matt, is the head and shoulders pattern. We've seen a lot of those recently with the U.S. dollar pairs. A couple weeks ago, there were a few in the euro dollar, Kiwi dollar, and pound dollar. But the interesting thing to note here, and this is a learning experience for myself as well, I think this is an industry you're consistently learning. The learning curve is high, and I think it's important to really reflect. And looking back at one of the trades in particular, Matt, was the Kiwi dollar. And this was, obviously we're seeing a lot of huge, massive dollar sell-offs up until today. And, the head and shoulders pattern, for me, works a lot better when it's going with the trend. Against the trend, you might be able to get 50 to 100 points just on average. But, until that confirmation, until you see that true reversal, I really think that, you need to stick with the trend in order for these patterns to be truly effective. Right.
So you're long, you're long anything but the dollar right now. Yeah.
Yeah, pretty much.
So when you're looking at, I always like to ask, give us some structure. Are you a short-term trader? Do you look at 60-minute, 30-minute, 10-minute, 5-minute tick charts? What do you like to trade off? What do you like to trade off? What's your time frame?
I like to sure. I do all my technicals, the weekend before, and I do it off a daily time frame. Okay. I think that really gives the broader perspective. It gives the big picture on things. Obviously, I adjusted towards a smaller time frame to get, help fine-tune my entry and exit points.
Sure.
But, I really like to trade, big breakouts, large breakouts. I'm pretty patient, and, especially recently, it's become a little more difficult, so we've had to be a little bit more flexible with regards to our strategy and, utilize other patterns and things like that. But we do trade.
If you're trading daily charts, how long will you stay in a position typically?
Matt, I'll be honest with you, it really depends. I know I hate to say that, but it could be a day, it could be a couple of weeks. It really depends on how strong the breakout is. It could be literally, I could be in and out in 5 minutes, or I could ride it for up to a month. It really depends on that trade. Again, flexibility comes into this, but I don't think there's an average trade per se. It really depends on what the setup looks like.
Okay. And do you kind of stick with the major pairs when you're trading, or the more liquid pairs?
Yeah, I do. I mean, my favorite pair to trade probably, I would say, is the euro dollar. Obviously, it's the most liquid. But I trade the Kiwi dollar. I trade some of the crosses, euro pound, all the yen pairs, the major yen pairs.
Right. That's good. I mean, and what would you suggest to people that have never looked at, trading currencies? Because there are obviously, hundreds of pairs. I always tell people, like you said, start with one or two and get to know them. And no matter what you trade, Jonathan, I'm sure you agree, everything kind of has its own biorhythm and the way it operates. So,
exactly.
What kind of feedback can you, give maybe, guys that are in your shoes a decade earlier that are looking to get into this business?
I would say, Matt, you just keep it simple. As you just said, have a couple charts that you kind of become one with. You want to really learn. You want to have these two up, and you want to look at them, see what the rhythm looks like. Don't over leverage. Keep it very small. Obviously, start with a demo account. I think a lot of the problems I'm seeing with some of the up and coming traders right now is that they're over leveraging. They're burning out their accounts, and they're not letting their winners run, and their losers they obviously are. So I mean, those few things I would really say that someone else who's looking to start the industry, keep it as simple as possible, and don't over leverage.
And I would also tell people, and they always ask me, well, I got $2,000. I'd say, wait until you get 10 or 15, or give yourself a shot. And it doesn't matter what you're trading, but you got to give yourself some room to maneuver. And just because you have $100,000 doesn't mean you should trade like you have $100,000 necessarily. So
exactly, I would totally agree with that.
So I always err on conservative, a more conservative learning curve. Take your time and learn the process, of buying and selling and straddling in different orders, and learn how your systems really work and how you work under fire with smaller money before you start. As you said, Jonathan, levered. It's already a levered product, so don't put yourself, don't put the gun in your mouth to start.
No, I totally agree with you. And, I think the reason I'm just trading currencies right now is I've become a master of one asset class. I think as you progress as a trader, as an asset manager, you could, start expanding a little bit and practicing in, smaller slot sizes and smaller dollar amounts. But I think, if you want to be successful at this, you really need to master one thing before moving on to the next thing. Yeah. And that's kind of what we're doing here at PatternTraders.
So tell us a little bit about PatternTraders and what you've, begun here and what your goals are with the business.
Yeah, I mean, we are CTA. We're looking to, to grow, obviously, like anyone else. We'll eventually go into commodities probably in the next year or two. I have a couple accounts that I'm going to be setting up shortly just to get some back testing done with the same strategy. I know a lot of the skills are transferable, but I want to make sure and obviously fine-tune that specific to that asset class. But, we are a boutique shop right now. We want to get larger, but we don't want to be too big. I really, I like the sense of a smaller operation, and, and that's kind of where we are right now.
So, would you consider yourself a trading service and or consultative? I mean, do you actually sell research?
Yeah. Or right now, Matt, I don't sell any research right now. I do give some general advice into commodities, and in terms of the correlations, I do use that on a day-to-day basis to help me just, with my currency trades. But, I think eventually we might start, doing some more writing. I'm actually working on a project right now with David Stendhal, for an article we hope to get published in Stocks and Commodities. Cool. So, I do have some articles I've written on PatternTraders.com, and eventually we might get into some subscription services as well.
Okay. And, with the site, obviously, people are interested, they contact you directly if they're interested in your, portfolio management. We'll leave it at that. When you look into commodities, what are some of the things that as you look to get into that and diversify your business and your model after 5 or 6 years? What are some of the things that concern you about commodities? Maybe that they're not as liquid, they're not as volatile. Yep. What types of things are you looking at as you look at those?
Sure. I mean, I think a lot of the intervention we're seeing is really a concern, Matt. A lot of the margin hikes, things like that, become very political. And I also think we're seeing a lot of, not collusion, that's probably the wrong word, but we're seeing a larger scheme of collaboration on a global level that really concerns me.
The invisible hand?
Pretty much, yeah. And you see that. You can see it in the news wires that come through. You see it everywhere. And that's a concern. Yeah. I think that really kind of makes a lot of people a little bit more reluctant to get into, some of that more speculative positions. And I think that is a concern.
Right.
Obviously, you mentioned liquidity.
Yeah, so how do you get past that? Again, the perception with even a lot of intellectual, long-time investors who are used to some sexier vehicles like you're talking about here, they get a little spooked and scared just because, they're brokers in the mainstream and everybody talks about currencies and, commodities are so, they're scary and dangerous. But, my full opinion is it's really nothing more than education and they're probably less scary and more liquid than stocks, but you got to go through that education process. So give me a little, you're talking to me about your product. I'm nervous. I'm scared. What would you tell me?
I would say a lot of times it doesn't have as much to do with the actual asset class. It has to do with, the way you manage money. And I think at PatternTraders, we are a pretty conservative CTA. I know a lot of the reputation for a lot of these types of products, as you said, is very high risk. We try to reduce the risk as much as possible. We are conservative. And, I would say it really depends on how you trade, not necessarily the product that you're trading.
Yeah. And how do you? What are some of the things that you will do to reduce your risk exposure?
We are discretionary traders. We're not systematic traders, and I think that's the most challenging part of my job as a discretionary trader is taking the emotion out of it. But especially in these markets, you're seeing a lot of coiling, you're seeing a lot of consolidation, and I think you just have to be a little bit more smart with your trades. You have to keep tighter stops, be really in control of that, and you got to know when to take your profits. And with our strategy being momentum based, it's been a little more challenging. So we've had to kind of put tighter stops and know when that false breakout is going to occur. And, I think it really has to do with, your money management. It all comes down to that.
Mm-hmm. And let me ask you some kind of specific market, here we are, June 1st, 2011, just to timestamp it a little bit. You're of Greek heritage, you mentioned to me before we came on. What's your opinion of this whole Greek situation that, the second, basically second bankruptcy that's going on in Greece, and how does that affect what you're looking at every day, when you come in?
Sure.
It's well telegraphed, but, what are you thinking when you come in every day?
I think it clouds the bigger picture. I think it shouldn't affect things as much as it is, with the actual credit downgrades. And we're seeing that so often here, Matt. I mean, it's becoming so trite. We can say, we want that. It shouldn't affect markets, but, it has been a little bit. And I think we're going to continue to see that over time. I think with Greece, it's just getting played out already. I mean, I think they need to, deal with their issues over there. And, they are becoming insolvent. I think the chance is probably like 60, 70% they're going to default by the end of the year. And, when we're so global as we are now, I think it makes things a lot more challenging and it really lends itself to a more large-scale coordination and cooperation, if you will. I mean, it really does.
My question is, Greece is one country, but there's probably you could argue that California, Illinois, New York, all these states of the United States are bankrupt, and even our own federal government. So when does it, like you said, coordinated efforts? Are we going to consolidate, in your opinion, maybe, and get down to one currency? I mean, do you see that possibility happening?
Sure. I mean, that's something longer term, Matt. We could see. I think it's a, more radical thought short term. I don't think we'll get there anytime soon, but, I think it's something, that's why, gold, for instance, we've seen a lot of people either love it or hate it. But I think a lot of people are putting money into gold just because of that. It's an inflation deflation hedge. Right. And people don't know where to store money. I mean, the best currency has been the Swiss franc for obvious reasons, but I mean, it's really, no one wants the dollar. I mean, right. That's for certain. And, who wants the euro right now? No one.
You're right.
But it's still going up relative to the dollar.
Every fiat currency is not attractive to me for long term. I agree. I got a question for you specifically because I've been kind of seeking it out. Is there any, liquid way that you know of to short the Greek bonds?
Be honest, Matt, I'm not too familiar with that. I'm not sure,
okay.
To be honest with you.
I'm not either. That's why I'm asking. But I've called around a number of desks and haven't really found, any of the half a dozen or so brokers that I have relationships with, that are pretty, I would think are pretty tenured in that stuff. But nobody's been able to help me. So if you find out anything there or any viewers, please write me at mistrade@gmail.com. I'd love to hear about it.
Oh, absolutely, Matt. To be honest with you, I don't even consider it a bond at 25%. I mean, that's
right. But I also think it's going to go to zero. So I'd gladly, keep selling it all day if there was a way to do it and have some liquidity.
Sure. Absolutely.
QE3, everybody's talking about it. Is it going to happen?
Honestly, I think it will. I don't think it will happen as soon as people say. A lot of people are saying QE 2.5, 2.7, all this garbage. But I think we'll see QE 3 towards the end of the year, maybe in 2012. I think right now, there's a lot of pressure on the Fed not to do anything, not to buy any more bonds. I don't think it's going to happen in July.
Is there any type of event you see that would drive it?
Contraction. I don't think we're right now in a double-dip recession, Matt, but I think we may go towards that direction toward the end of the year.
Good. You and I are on the same page there. I think it's going to take a 10 to 20% stock market sell-off before the Fed and the Congress and the masses demand it. But that's when it'll happen. I agree. It won't happen now just because everybody's talking about it. It will happen later. I agree. So
exactly.
It's interesting. Again, I think we're in the same book there. How about the yen? Again, you're looking at the yen often. With the loss of industrial capacity in Japan, 10% of electricity is still not restored. How will the yen behave?
Right now, I haven't traded a yen pair in a while, Matt, to be honest. I mean, it's very tricky. Obviously, you have that traditional correlation of risk sentiment and obviously the carry trade, dollar and the yen. But right now, I'm not sure it's consolidating. I don't think right now we can really tell. That's why it's been very hard to trade that on a longer-term basis. Yeah, so any of the trades we've done in the yen pairs have been short-term. Very short-term.
Fair enough. Yeah. How about, on the FX, when you're trading it, do you prefer to trade on the exchange or in Forex markets?
We do spot currency over the counter.
Okay.
Yep, and it's what we prefer right now. So
give me, before we wrap up here, Jonathan, give me one or two kind of macro thoughts, ideas you have that you think would be valuable to the viewers out there. Moving into the second half of 2011, just give us a couple of macro views. I'm not looking for a short-term trade.
Sure.
I'm just looking for kind of some ideas maybe that are independent for you.
I would say just, don't have expectations. Let the price action do the talking. A lot of people are making predictions here. The economists are 90% wrong. You know what I mean? It's one of those things you got to have your, no expectations going in. Define your risks. I think the next few months might be a little volatile, especially with QE2 coming to an end. You're going to see some changing dynamics. Some of the correlations are changing a little bit. Like the dollar, for instance, today we saw a little bit of paradigm shift. The dollar increased. As a safe haven asset with the market crumbling today. So I think you might start seeing some of the dynamics change a little bit. I think it will be very beneficial to make note of that and to just kind of compare all the asset classes and just have a good strategy going into this. And again, don't have any expectations. Trade what the charts are showing you.
Yeah, and to concur with you a bit here, I think you need to know, is it a volatile market, a non-volatile market, trending up, down, sideways? If you can answer those questions, I think, from a macro perspective, it helps in your day-to-day expectations and rules and guidance. So that's good.
Absolutely.
Those are good suggestions, Jonathan. I appreciate your thoughts on that. So
you got it.
What else going forward? Anything else that you'd like to throw in about PatternTraders? Again, you're working on some written word, maybe some research, adding commodities to the portfolio. It's all exciting. We appreciate you coming on. Anything else you'd like to add before we sign off here today?
No, I mentioned briefly earlier, Matt, that I am working on a project with David Stendhal. We're working on an article for Stocks and Commodities. What we're doing actually is, incorporating value charts, with, a divergence indicator. And, I think it's pretty exciting what we're doing right now. And, cool. Hopefully we'll be able to show everyone else that very soon.
Well, I'd love to read it if you want to test it before you give it to your publishers. I'd love to give a quick jaunt through it. I'd love to read it. So
appreciate that, Matt. I'll take you up on it. All
right, Jonathan Eliasof, again, www.PatternTraders.com. He's a CTA, NFA, qualified. Check him out. Check out his site. He's got some interesting research. Again, a technical trader, man after my heart. He trades Forex more than I do. I stick to the financials and the commodities, but I definitely dabble in the Forex. So good luck to you, Jonathan. Appreciate you coming on.
Thank you so much for having me, Matt. I really appreciate it.
Sure. You're welcome.
Okay.